Hey, it's Mac with PriceActionTradingSystem.com, and it is Wednesday and it's February 9th. This will be our chart lesson for the day. And I thought I'd start off by giving you a quick look at the daily chart with the envelope bands. People always ask me what this is. This is our envelope strategy. But anyway, you can see that we've had that channel up. We had a break. We actually had a failed second entry short, and that looks just like what you would see on a 2,000 tick chart when you see the trap traders exiting. Look at that bar. We could just make a new high here and turn back down, but we could make an attempt at a measured leg up. And if you look at this measured leg, a measured move gives us a perfect retest of that previous, that's the all-time highs right there up at 4,800. So we may test that yet. Maybe the selling's over. We'll see. There's still a lot of crazy stuff going on right now that could turn this market down in a heartbeat. So anyway, for now, I'm looking for a retest of this high, which we're really close. The high of this bar is 45.86, and today we've been 40. We're about a point away from that. If you look where we're at right now, we're a couple of points away. So we're heading that way. But let's flip over to the intraday 2,000 tick chart and go through the trades real quick. And here we are. And this is a very high level look at the 2,000 tick chart. You can see that we spiked up on this yellow and had a real tight spike in channel. This is a real strong move right here. And then we also had the blue channel working up, which we had a break and a new high. And then there's two legs of correction in there. You can see those two legs of correction. And from there, we found another support here and another spike and a bigger spike. Basically, this is a larger spike in channel. Here's a more micro one. Although that's not really small, but in comparison to the whole day, this is still a spike in channel up. And you can clearly see this cayenne colored channels in play. And of course, I always draw the micro channels in there to take advantage of those. So notice we didn't have any sales until we made a break and a new high here, and it looked like we were going lower. And then I had one more up here after this perfect two-legged move up, and you would expect prices to come back. At this point, you don't really have this channel and trend line confirmed till it comes back and bounces again just before 2:30. However, you can clearly see that we're working off that midline on both sides all the way, and then you can see this still comes into play in the afternoon. Perfect channel there, real easy to see. There's a little bit of sideways to this, but this is still mostly up. With the little two-legged correction, you have some down, and then we're all pretty much up. And I mean, this is a little flatter because we really rallied so much. And usually, most times, prices are going to try to. There's a gap on the chart, and let me show you that. Here was the high yesterday. Well, here the yellow line is the 8:30 open. So if you look at the regular New York Stock Exchange times from 8:30 to 3:30 or 4 or whatever it is, I know it opens at 8:30, then you wouldn't have any price action between this high and here. And so prices will try to actually, in most cases, we're going to try to fill that gap. And that's what will normally come back. Prices will try to come back pretty quickly. So at some point, we may come back and try to fill that gap too. But I just want to make you aware of that. And usually from the open to the high of the previous day is the first target, and if prices continue to go lower, then it would be the close from the previous day, and then you start looking at support levels and so forth, and probably even the open of the previous day, things like that. So somebody asked me about that today, about the close from yesterday and the open today. Those are generally important price levels, and you can see we came back after we opened today. We came back and tested that opening before prices kind of continued on higher here, and that's common. So uh, that's why I put those two price levels on there, because you will see prices come back and test them uh, multiple times. So, and there was a speaker at 11 o'clock today, FOMC speaker. I don't usually pay too much attention to those, especially the green ones. Um, it's always possible they can say something, but when they speak, it's usually at a luncheon or something like that. And so, it being 11 o'clock at my time, that's probably noon New York time. So they're probably speaking at a luncheon somewhere, and they may or may not say anything. But even if they are going to say something that might spook the market, which they probably won't, you're not going to know what time it's going to be. So it's not going to be right at 11 o'clock, because that's when the thing probably starts. So needless to say, I don't pay much attention to these speakers. So obviously be aware of it, but don't worry about trading at 11. And if something happens, just have your stops in there, and that's all you can do. So, but very rarely are you going to get anything out of those. The only way is if they said something off the wall cuff that caught people off guard. Then something may happen. But let's back out here. I'm gonna try to keep this a little shorter. Yesterday, I did get a bunch of comments about yesterday's video, that it was helpful to you, and so like I said before in a previous video, I don't plan that stuff. It just comes out, and I don't believe in coincidence, and I almost always get some kind of response that when I have one of those kind of little episodes where something comes out and I talk about it, that people say, hey, I felt like you were talking to me. I needed that. And just like always yesterday, I got several emails. Usually I'll get one or two or three, but I got a half a dozen or more yesterday. So obviously it spoke to a lot of you, and that's good. And again, that stuff just comes to me. So if I feel it and feel like it's worth talking about, I'm going to talk about it, and hopefully it helps somebody. So anyway, let's talk about the trades. Let me zoom in here. And clearly we were in this channel coming up here at 7 o'clock. 7 comes right here, but right across here, but we're kind of going sideways, but it's still a first entry, second entry. And this is a strong trend. I made this one green just simply because we're a little bit away from the EMA, and I generally don't like trading that far away, but that's the first close outside of that channel. And you can see here, I didn't put this on here because it was so early, but it's probably going to be right there. But you can see we still got a ways to go, and you can see that target's way up here. And at this point, you don't have really the blue channel, so all you're looking at is the yellow, and you expect prices to make a new high. Again, I'd prefer it to be off the EMA, but this is a strong trend, and the trend line has been holding. That's the first break, and then you get a second entry long. You may take that trade, and it turns out that this is a spike and channel up, and then we go into this channel, and notice this move right here. I really looked at this like a failed second entry short. Notice the low here, and then you get a first entry and a second entry. Technically, by the count, it's not. But notice how we came back here and then made a higher low. And so this is a lower low, even though you don't see it break lower right there. So that's a lower low. So first entry, second entry, it fails, and it confirms that trend line. It's really kind of an inside bar too. And that's another reason. Generally, I'd avoid those inside bars. But with it being a failure, you don't care about the inside bar. So we're really not trading that as a first entry or second entry or high or low or anything like that. We're trading as a failure, and it failed one tick above that bar. So that's why we still mark that. However, I still made it green. And of course, we run on up. We come back, we make a first entry, and then we get a second entry long right off the key entry point. This time it's at the EMA too, and it actually breaks lower and turns up. You could trade that as an engulfing bar, but maybe you wait for it to close and go long one tick above it, however you want to trade it. Now, if you trade that as an engulfing bar, you have to put your safety stop below the previous bar, which is right here, which doesn't really change things a whole lot. Let's see, this one is 45.57.50, and that one's 45, 57.50. And you see that would have saved you on that move back. But anyway, your safety stop on an engulfing bar, because it hadn't closed yet, you don't know where the lows are going to be. So you put your stop below this bar or the previous swing. If that would have been here, then you move it all the way over here. And as soon as this bar closes, you move it one tick below that. I can get up, down here. That could get a little risky, so you got to be careful with that. But generally, you might be better to wait and then till it closes and then trade it. You'll miss some better trades though, and you won't get as good entries a lot of times either. But we run on up. There's another little second entry here, but you can't really enter that. We finally get to the highs. We make that one more push up, and we come back here, which is just the first entry, and then your second entry's here. Signal bar is not good enough, and then we've clearly got a trend coming down. I don't think you should go short here yet though, because this has been a strong trend. We're going to try to probably make a retest of the high, which we do right here. But finally you get a break of this, a new low, then you get a first entry, and then you get a second entry that fails. I didn't mark this one because that's a little too congested, and we could push on down before we go higher. So it is a failure, but you can clearly see the very small body there, and everything's inside this big bar. Just avoid that one. Of course, it would have worked, but don't risk it. Of course, we're moving up. You get a break, move to a new high, and then we're trending down again. And you get a first entry and you get a second entry, but the signal bar is no good. And that was a nice trade, but you just don't get a setup for it. So you just have to skip it. But of course, we run on down, and then you can draw your trend line off these first two swings here, and you actually get like another move down. And so you got a couple of opportunities to prove that. It comes back here and confirms it, which is a higher low, but that's a little congested. Again, everything's inside that big bar, so it's a little congested. But we finally break higher, pull back, and get a failed second entry short that bounces right off the key entry point again, further proving it. And now your smart traders are going to come in, and boom, up it goes. There's a higher low here. But when it didn't break higher right there and you got all the resistance right here, I'd skip it, wait for a true reversal, because this is a double bottom. Even though you could count that as a reversal, it's a double bottom. So now you got a first entry, second entry, so you got another one. I marked it green, but this one's real close, borderline. It is kind of a neutral bar, but that's, the bar doesn't matter so much when it's a trap. But you can see it didn't really take off there. And until it got a second entry, then the smart traders come in. So your smarter traders will probably avoid that one, because that's not quite a double bottom. It's close enough to say, hey, I'm going to count that as a double bottom. But I think most of your traders are going to wait and see if you get a second entry or something. And of course you get it, and then look at it, boom. Runs on up. So now we got a break of this one, 2 legs down, move to a new high. But you've also got the blue channel going now, so you got to be aware of it. And then of course we come back down here, we get a break, and we move up and you get a higher low right here. I like that one to run up to make a new high, which we do. So now you've got a break of this one and a new high in place, and you got a break of the light blue or gray, and you got 2 legs up to a new high. So now you might get a reversal. At the very least, you probably get some sideways action. So off that new high, you get a lower high, and then you get a failed second entry long. I like going short there. We drop on down, we get a little overshoot. You get a first entry, and you get a second entry. And that's why you got to be careful on these second entries after an overshoot outside the trend line. Of course, the signal bar is not any good anyway, so you wouldn't take that trade. Actually, I'll take that back. I'm looking at the wrong bar here. That is a good signal bar, but because you got that congestion right there, you are kind of making higher highs and higher lows. But notice has no body. That has no body, and you're outside the trend line, and you did have an overshoot, so it could just go right on high. I didn't draw the little trend channel, but you can clearly see right there, you don't really want to go short there yet. I always like to put those micro trend channels on there. I don't draw those as much. If it's a bigger trend, I'll draw it, but a real quick short one, sometimes I don't draw them. I can glance at the chart and see them now, but until you train your eyes to do that, you need to draw them. I'd say draw every one because sometimes this stuff just doesn't pop. Even to me, sometimes I don't see some of this stuff till I draw it. But for the most part, I can glance at the chart and see these patterns without even drawing the trends anymore. So, but anyway, you got your first break, and looks like we may be still trying to go lower. Uh, this was close to being a triple top, but it didn't quite get there, so it could push on up. So I don't see any short there. And then you finally get a triple test here, but not the best. I mean, it's fairly bearish, but there's not much room left there, and I just think you don't know it's going to do this. So I say waiting for a better trade, and of course you might be looking for that measured move from here to here. But right now we're just going sideways, but it does drop down, comes back, gives you a first entry, comes back and gives you a second entry short. That signal bar is not good enough for a second entry short, unfortunately. But you've got a new high here, so there's a first entry, second entry. So it's a failed second entry, and it's a second entry short. So even though it doesn't qualify on the second entry short because of the signal bar, it does qualify because of the failure. And so there's a trap there, and you can see it drops down pretty quickly. Makes another swing and one more move, and it bounces right off. Actually, that'd be the first time you drew that trend line. So you wouldn't really know that trend line's there yet, but you would be looking for this measured move. So there could be some more down time here, but you don't really get a setup for any more shorts. And then all of a sudden we're going the other way. There's a first entry and a second entry, so that looks like a failure, but too congested, and you see what happens. There's just no setup there. There is a triple test here. Again, no signal bar. Runs up, and then we're working sideways. Get a breakout that fails. Not a very good signal bar. You get a lower high, but it's right back into the resistance. It ends up breaking lower, so you can clearly see the two legs down there. So this may fail out the low side, and we may head higher again. And there's a higher low there, but you don't want to take that. And then it pulls back and gives you that failed second entry short. I like going long there. It comes back and gives you another double test right here. But if you look at this low, it's 45.70 and a quarter. And then you look at this one, it's 45.70.50. If this one would have been 45.70 and a quarter, I'd say take that trade. But because it's, you come back and you double test that after pushing through it. If you didn't enter here, then I wouldn't have entered. And we do run on up, and I don't see any entries up here. We're getting too far away from the EMA. And you finally make a new high on about a perfect measured move. You got leg one, and there's actually two legs in leg one there. There's leg one, and there's leg two. And that's basically another perfect, but then that's one leg, and from here you get another leg that's almost another, that basically is another perfect measured move. I mean, to the tick. And then we turn down because of that measured move, and there's also a little congestion here, so that's like a failed breakout. So you might take that short. I didn't mark it. Trying to pick tops and bottoms, that's why most people, somebody sent me an email today about trying to pick a top or bottom, and I tried to explain that that's a losing strategy. There is a lower high here, but not much room back, and then finally you get the failure. It was a failure when it broke below this bar right here, so I like going short right there, or even below this one. It confirmed the trend line as well. It's right off the key entry point, and the bottom falls out of it. You don't get another real opportunity to enter this. You might have seen this as a second entry short. However, the signal bar is no good. You got this, but it's an inside bar. Don't take that. Of course, it bounces off the trend line, and that confirms this trend line. The problem is you don't have a break of this yet, so even though there's a great setup right there, it's a little ways away from the EMA, but I wouldn't take it right at that trend line. Of course, it pushes up, you get a first entry, pushes up, and you get a second entry, and that right there is just an invitation for a trap. Look what happened. I guarantee you people loaded up on that second entry short right there with that huge signal bar, and that is 16 ticks. And when it reversed instantly, if it breaks above this bar, it's a failure. Go long right there because all those people are going to exit and look at it go. The people thought they were smart. Common sense would say, hey, we're probably going to make a new low. Don't fall for that trick right there. Don't do it. And boom, look at that trap, that reversal. It's a failed second entry short, and off it goes. It runs right straight back up to the highs in. This move was 16 points or $800 in 9 minutes and 15 seconds. Pretty good move. And that got us into 230. So there it is. Great trading day. The rally's still in play. So we're close to that new high up here around 48 or 45.84 or so. I think we had to get above 45.85 for it, if I remember right. Have we gotten there yet? We got real close. So will we get a new high and turn down? Possibly, but we could get that second leg up. So we'll see what tomorrow brings. But so far, the rally continues. But I'm going to wrap it up. We'll be back again to do it tomorrow and wrap up our week. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.